Okay, so let's just cover this disclaimer. So just take note that this presentation is purely for education purpose. The information in this presentation is intended for general circulation. It does not take into account specific investment objectives, financial situation, or particular needs of any particular person. Okay, without further ado, let's move along. So, I mean, again, a bit of very, very quick run through on how I analyze the markets. I use a lot of price actions. And when I mean price actions, meaning that basically I just want the market to tell me what it's trying to do. Okay, I've never changed my strategy for the past 5 or 6 years of my trading. I always stick to the same thing. So I'm very familiar with price actions. So if you have any questions, feel free to shout out. But essentially, the whole idea is to group the markets based on what phase is in, whether it's uptrend, downtrend, consolidation, and then from there try to plan the trade around it. Okay. Typically, I try to look for trending markets. I do not like consolidating markets because when there's no direction, means there's low probability trades, and I do not want to be stuck in that kind of setups. Yeah. So more often than not, every day when I look at the charts, the different charts from commodities to indices to FX to stocks, I try to scan the markets for the best trending and the most obvious moving ones so that I can, capitalize on it. Okay, so price action, I mean, it is a very powerful tool, so please go read up on it. I mean, there are 1,001 strategies out there, really. If you flip open the newspapers, there's so many people trying to teach you a strategy. But if you have been trading for the past 2-3 years or even more and still have not found any success yet, then you really need to dig deep and quickly find a strategy that suits you, something that you can relate to, and then you need to work on your psychology. Okay, so psychology is a big part of trading. There are a lot of fancy strategies out there, but at the end of the day, it's all about psychology. Alright, you need to understand yourself for you to make money in the markets. It sounds very cliche, but it is so true. Okay, psychology is a very important part of trading. All right, so let's move on to the market proper. Let's start off with the indices. Now, I have some questions from some of you emailed me last week regarding trading, based on the setups that I covered during the webinar. Now, take note that at the end of the day, I mean, I'm a technical trader and I use technical analysis to plan my trades. Let's say if you attend a webinar on Tuesday, and I think that for example the euro dollar is an uptrend. All right, but however, the coming Thursday, there's a upcoming FOMC meeting, and news like that can totally change the dynamics of the technical setup. All right, or the trade plan based on technical analysis. So as a trader, you need to be flexible enough to know when the trend is changing, when the setup is not valid anymore, how to look at what is happening. So now, just a quick tip before I start. Now, if you're looking to trade the markets based on technical analysis, right, you still need to pay attention on when news is coming out. Okay, because news is almost like 50-50 sometimes. Of course, sometimes you can make an educated guess of what might happen, but more often than not, it's 50-50. And it's not only what might happen, it's how the market will react to the news. So it's two different things, okay, because the correlation between news and the sentiment always changes. Now, what you want to look out for is, let's say if the market overall is uptrending, right? Okay, and let's say it's coming down a bit, and the news comes out here. Okay, and the news actually caused the market to push up further. Now, this is the best case scenario. So this is scenario number one, okay? For me, this is the best case scenario. Why? Because this is where the technicals and the fundamentals are aligned. So the news is actually giving more momentum for the sentiment to push the price higher. And this is the kind of setup that you always want to look out for, okay? Now, scenario number two is where it gets a bit messy, okay? This is where, for example, the market starts trending downwards. Okay, very nice downtrend. As a technical trader, you just want to short. Okay, however, suddenly the news comes out and the market just do a V-shape push up like that. Okay, for this kind of scenario, I prefer, so this is the news. All right, this is what the news did. Okay, so for this case, this kind of scenario, I prefer to be a bit more patient because on the technical side of things, the market is still trending down, but the news caused it to spike higher. Okay, but it has not broken any new highs yet. It just spiked higher. So for this kind of thing, this kind of scenario number 2, is where the news and the fundamentals and technicals are conflicting. And this is where I'm a bit more cautious. Okay, let me just give you an example. Any questions, do shout out, yeah? So let me just give you an example. I think I took a Kiwi dollar trade last week. Okay, so where was I? Yeah, it was here. Okay, this is the daily chart. Let me look for it there. Give me a moment. Okay, so this was the Kiwi dollar, all right? And basically it was, ignore this area here, but basically it was trending very nicely, you know, high high, high low, high high, high low, high high, high low, high high, same low, and then it just disappeared. Now if you look at this candle here, if you go back to the calendar, right, this little bullish pink candle was not little, it's actually quite a big bullish pink candle, was actually caused by a news release. I can't remember, something that the RBA said that caused traders, they made traders buy the Kiwi. Okay, so I knew that this was a nice uptrend, okay, and we were at support level here. Okay, before the news, it tried to break the support, because if this support is broken, means that the uptrend is turning, isn't it? But what happens is that the news push it all the way up. And when I saw this candle, I was more than happy to look for buying opportunities in the lower time frame, because the daily trend is up. Okay, news further validates the uptrend, causing it to push higher. And for me, as long as it breaks this resistance, I'm more than happy to join the uptrend, then target the previous highs here. Okay, so this is an example whereby, you know, the news, the fundamentals and technicals are telling the same story, and it's much easier to trade like that. Okay, so I just want to go through a quick little tip for you if you are confused about how to deal with news and stuff. I mean, whenever news comes out, when in doubt, do not trade. Simple as that. All right, when in doubt, do not trade. Of course, I have some news strategy, news as in NEWS, news strategy, trading strategy. If you like to do the scalpings on the 1 minute chart, 5 minute chart, but I'll leave that for another day. All right, so let's start with the S&P 500. Now let's look where we are on the weekly chart. So where we are right now, all right. Now for the past few weeks, 1, 2, 3, 4, 5, you can see that the market hit the high of 2100, not surprisingly, and it stopped there. For the past 2 months, it has made a big, strong push up from the support at around the 1850 level, and right now it's just stalling at the 2100. Okay, momentum is still to the upside. All right, but you just need to take note of the 2100 level. So if you're looking to buy, okay, I would say keep it shorter term, because anywhere near 2100, that is resistance. That is resistance for you. All right. So on the daily chart, I mean, there's a lot of argument out there fundamentally whether it can break new highs or things like that. But again, it's anybody's guess. If the markets want to push it higher, just follow it. If not, just be a bit careful of 2100, because this resistance is quite strong, has been respected since September-November period last year. So let's go down to the daily chart. Okay, daily chart, the trend again, very strong uptrend, but right now it's a bit more consolidating. So you can see that the support, the immediate support, is around the 2040 area here. Okay, and the market is trying to decide what it wants to do. What I like to the upside is that you can see that this support here at around 2050 is quite a nice support level here. You see, resistance here, support here, support here, support here. So moving averages is still moving upwards. The speed is still quite good, because you see the gap between the 20 and 50 moving averages is still there. So it's still, the momentum is still upside. Okay, but however, I'll be a bit more cautious if it breaks the 2040 level. Okay, that one I'll be a bit more cautious. All right. If you look at the swings, you can see that there's a significant lower low here, but there's a double bottom, or you can say a slightly higher low here. So the momentum is still slightly to the upside. This is a slight bullish divergence. Not the best divergence example, but this is a slight bullish divergence. All right. So anywhere near 2040, you might want to look for buy opportunities in the shorter term charts for the 15-minute chart, 1 hour chart. Okay, and then we see whether you can push higher. Right now, it's coming down back to the 204 area. Let's take a look at the 4 hour chart. Okay, you can see the 4-hour chart. You see how the 204 got reacted. So this 204 is very strong support, and you can see there's a lower time frame resistance here, right, around 2060, and you can see the 4-hour has broken above it. Okay, but for me the key low is this area here. If we are able to stay above there, okay, maybe we might come down here, mark around here, but if you're able to stay above this level, then most probably it make a push higher, maybe back to the previous highs around 2100. Okay, but the 4-hour has started to change itself to the upside. All right, you can see that there's a bit of a change in momentum here. So it came down lower low, and then it made a second double top, a higher low. So this is a higher low. So higher low is the first sign there's a reversal, isn't it? And then it made a higher high. So as long as this higher low is not broken, there's every chance that the S&P on the 4-hour chart will start pushing higher, and it might go to look for the previous highs, the key level at 2100 again. Okay, so that's the trade plan for the S&P. All right, Wall Street looks quite similar. Okay, so let's go to the weekly chart. Okay, you can see that most of the US indices behave quite similarly. So you can see the resistance is somewhere around 18,000, 18,001, but strong resistance level there. Okay, same thing, looks quite similar to the S&P. Okay, but if you look at the daily chart, you can see that the trend is still up. It's still high. And for the Dow Jones, right, the key level, the S&P was, what was that, 2040, right? For Dow Jones, I would say it's somewhere near the 17,500 area. Okay, 17,500. That is a bit, that's the part that I'm looking out for. Okay, you can see here again a bit of divergence, higher low here, significant lower low here. So this is actually a bullish divergence. If you look at the 4-hour chart, okay, you can see that the market is turning around. So it was making a series of lower lows and lower highs, and it has changed its course to a higher high compared to this previous high, and a higher low compared to this previous low. So we might make a push upwards, maybe back to the 18,000, 18,001 level. Okay, very similar trade plan to the S&P 500. Got it? Okay, so there's the US indices move. Oh, hi Sri. Yeah, sure, go ahead. What's your question? You want to ask about the US indices? Oh, okay, Sri, your question is how valid are 4-hour charts on US indices? It is valid. Yeah, I don't see why isn't it valid. I mean, obviously, I don't, whether it's indices or FX, I don't really see the difference in terms of which time frame you're looking at. Of course, some of the stocks that are not liquid, and then the lower time frame might not be that accurate because there's a lot of noise, especially like penny stocks and things like that. But in terms of FX indices, the market is very liquid. I think the chart so far, for me at least, my experience, the charts are okay. It's valid. Yeah, I mean, you have a good point. I mean, indices really only trade 8 hours, unlike Forex, which truly trade 24 hours. Of course, the IG, I mean, because we are using the, I mean, we are pricing the cash index for clients to trade. So essentially, we create the cash contract for you, but it's still following the underlying futures. It's still following the underlying futures. So in the sense that the indices are actually moving more than 8 hours. I know Forex is even more liquid and even more dynamic because 24 hours, but based on my experience, yeah, I think the 4 hours is accurate enough to trade. Because if you see for example, the Dow Jones 4 hours, right, you can see that the charts are actually quite smooth. There are not much gaps and things like that. As compared when you look at the futures market or some of the markets with less liquidity, you see a lot of gaps and things like that, but it's actually quite smooth. So I hope that answers your question, Sri, because I don't really see much of an issue with regards to charting on a index on a lower time frame. Same analysis. Okay, thanks for the question. Okay, so that's Dow Jones for you. Let's move on to the European side of things, the DAX. Okay, let's go to the DAX weekly chart. Okay, the DAX weekly chart, right? Okay, is basically trapped in this little channel here. All right. Not much. I mean, I would say there's a big fat consolidation in this case. Alright, just take note of the levels. Right now, where we are, right, this key level is near 10,000. Alright, so within this 1-2 days, there might be trading opportunities because you look at this 10,000 level, how important it is. Okay, you can see the circles here, resistance, 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 and now it might be resistance again, and it's a whole number 10,000. Okay, weekly trend is up actually, so it's higher high, higher low, higher high, higher low. But right now, let's see what happens at 10,000 level. Okay, let's go to the daily chart now. Okay, so if you see the daily chart, you can actually connect this trend line here to show the support. Okay, so 10,000 is key now. If this 10,000 level breaks, right, this line here, okay, then high chance we might continue upwards. Okay, continue to where? Continue to the weekly resistance trend line here. This level here, probably around 10,650 or so. Okay, so if the 10,000 resistance breaks, and if the bulls are in control, high chance we might come to this level here on the channel resistance on the DAX. If you go to the daily chart, you can see that we are trying to break 10,000. So there are two levels to look out for. Either it breaks 10,000, and high chance we are going back to the top of the channel on a weekly chart around 10,650, or it might break this support. This is about 9800, which is a trendline support. Sorry, 9880. Sorry, trendline support as well as the visual support. So we break this level, then we might come back down. Okay, because I would say the weekly chart gives the clearest indication of what's happening now, because of this big fat channel that's being respected. Because if it breaks the 9880, right, there's a chance that you might come back down and consolidate back to the bottoms, the lows here around 9,004 or so. Okay, so this 10,000 is quite a key level. Alright, so I would say on the daily chart, draw your trend line and look out for this 1-2 days what might happen. If you are bullish, I would say the first indication is that it must break the 10,000. Okay, it must break the 10,000 first if you are bullish. That's the first indication that the bulls are in control. Alright, let's see the 4-hour chart. Yeah, the 4-hour chart is slowly turning around. So it has made a higher high, higher low, higher high. It might come back down to consolidate around these levels here. Okay, and then hopefully we can push higher, break the 10,000, and happy days to the 10,006 level. Alright, but I think the 4-hour doesn't really show much. I think the daily chart and the weekly chart is quite important level to look out for. Okay, John, you want the CAC? Sure, let's do the CAC. CAC is the funds 40, right? Let's do the CAC. So funds 40. I've not really looked at this. Let's plan it together then. Now let's see, weekly chart. Let's go to the monthly chart, see what's happening in the monthly chart. Okay. The monthly chart is very, very obvious that the key support levels around this. You see, if I draw a line across here, this level is tested so many times around the 4,000. Let's call it the 4,200 area. Okay, very key level. Okay, but money chart is, I would say, consolidating. Going to the weekly. Now, see all these circles that I drew. Let me delete some circle. No, it's quite confusing. Yeah. Okay, so weekly chart, the momentum is towards the upside. Okay, I drew this trend line a couple of weeks back and it's broken. Okay, but however the downtrend is not sustainable. This high here was made and it's actually making a series of higher highs and higher lows. So the momentum is actually on the upside on the CAC. This is a very strong support level. Like I mentioned, around the 4,200 to 4,250 area. Okay, so this area here is quite a key support level. Okay, what I like about the little divergence that you can see is that you can see that the MACD has made a very significant higher low. However, on the price is made a double bottom, so there's a bit of a bullish divergence there, bullish. Alright, but of course this support must be respected. This support is broken, then it's a different story altogether. Okay, but this support must be respected if you are bullish. Alright, let's go look at the daily chart. You can see daily chart is also sort of like consolidating. So again, the level you have to look out for is near the 4,002 to 4,250 area. Okay, this is a key level to look out for to see whether the market is moving higher. Okay, it's quite an obvious divergence here as well, a bit of a bullish divergence. So you can see that this is a slight lower low, but if this stays here, then this is a higher low. So there's a chance that it might push upwards from this support level. Okay, key level 4,200 to 4,250. You want to look at those levels to see whether the market can push higher. Okay, but it's a bit uptrend and consolidating, not the best looking chart out there, I must say. Okay, but if you are bullish, I think near the support level, if the shorter term time frame starts to turn around, I think it's a good level to try to take it up. And I think keep it short term for now, because if you look at the moving averages on high term time frames, it's quite messy now. Alright, you can see that the moving averages are sideways in the weekly. On the daily, it's also quite sideways. Okay, so the DAX seems to be clearer. Okay, the CAC not much, not as clear. So keep it a bit shorter term. However, the key support look out for is this area here. Elvin, what do you think of the key reason? Okay, I'll come to Forex in the next 5 to 10 minutes, Elvin, and then I'll talk about pound kiwi for sure. Okay, so that's the CAC for you. Let's move on to somewhere closer to our shores. John, is that okay for the CAC? You have any other questions? I mean, like the way I trade, right, is like I look at all the different charts or different markets. So I do like to squeeze, like sometimes when some clients or some traders ask me, okay, what do you think of this pair or this particular chart? And if I can't find anything, I just tell them don't trade this, because it's really hard to read. It's like, I think I mentioned this before, but it's like playing blackjack in a casino, isn't it? If your card is 17 or 16, the probability is not that high, isn't it? So you probably do not want to risk that much, or be too confident. So same thing, if the chart doesn't look good, then I'll rather look for other charts and try to find something that's very nice, high probability to trade on. So don't try to be too fixated on one chart. Sometimes the chart, especially like cross currencies and things like that, the chart can stay sideways for a long time, for a long time. Okay, so let's go to Nikkei. So this is the weekly chart. For me, Nikkei is a bit of a mixed bag. This is one of the few charts that I'm not that keen to trade, because if you look at the weekly chart, okay, it was a nice downtrend. Alright, you see the circle I drew? The circle I drew, I think, was a couple of webinars back when I said that the Nikkei was still in a downtrend. Now, why did I say downtrend? Was because it's made a lower low here, lower high, lower low, and it's now lower high. So I'll say if it's going to drop from here, because see all the previous support term resistance, and true enough, it dropped. However, when it dropped, okay, this became instead of making a new low, it formed a higher low. Okay, so it came from a lower high, okay, lower high here, and instead of making lower low, it formed a higher low. So we say that there's a reversal coming, and true enough, it made a new higher high. Okay, so initially I thought that it would go up to all the way to resistance, trendline resistance here, but I think there was some yen news. I think the BOJ news caused it the whole thing to reverse again. I think because there was no stimulus and things like that. So because the BOJ news, the whole green bullish candle got reversed, and now we're stuck in limbo. So it's going to be a tough read for this one. I'm not sure whether it's going to test this support again, or we are going back to channel high somewhere here. Okay, so Nikkei is a bit of a tough read, and I suggest, you might want to stay away from it for now. Okay, look at the daily chart. If you look at the daily chart, it's pretty similar. Okay, you can see that it's just consolidating, and when I see such a chart, I will definitely move on. Alright, I hope you guys see my point, because there's really nothing much to infer. I mean, of course, I can try to squeeze, so I can say that, okay, there's nice support here, okay, there's nice resistance here, but nothing much showing itself. Okay, so I prefer to look at other charts. Alright, so that's for Nikkei. Just be patient and let it play itself out first and see what happens. I would say use the weekly chart as your guide. Okay, use your weekly chart as your guide. But for me, if it breaks the previous low, the 15,005, if it breaks the previous low, happy to join in a trend. Because if you want to be patient and let it play itself out, and if it breaks 15,005 or so, it can show you that a downtrend is coming. And it'd be very nice trading after that, because it's going to be very trending for quite some time. Alright, because when the weekly or daily chart breaks a key support or resistance level, more often than not, the trend will tend to stay its course. Alright, so that's the Nikkei for you. Let's go to the Hang Seng. Alright, Hang Seng, weekly chart. Okay, so the weekly chart is making a higher high, and right now it's higher low. Let me just do this line here. So you can see that it came down, lower low, lower high, lower low, lower high. Alright, and you can see here, this was the previous low. This was a new high that it broke from this high. Another higher high, and right now it's testing the previous low. Key support for the Hang Seng is not surprising around the 20,000 level. Okay, we are at the key level, 20,000 level. Alright, so let's look for clues on the lower term time frame. If you look at the daily chart, alright, you can see that this whole level here. Okay, so the This whole area here is a key support level, around 20,000 level. So what you want to see is how the markets react to here. If the 50-minute charts or the 1-hour chart starts pushing higher from here, then high chance that we might make a visit to the previous high or the uptrend might continue. But if this level here's key support level is broken, then we might come back to the previous low around 18,005 or so. Okay, one interesting thing to note is that there's a bit of a lower low swing on the MACD here, but right now it's still a double bottom. So there's a slight, very slight bullish divergence. Okay, but if it breaks a new low, then it's convergence, no more divergence. Okay, but I would say use the weekly chart as a guide. Yep. So use the weekly chart as a guide. You can see at this level here, anywhere between 19,005 to 20,000, this is a very key support area. If it's supported, right, high chance we might go back to previous high, probably around 21,000 or so. Okay, but the weekly chart seems to be want to reverse, but this is a key support level because if it breaks, most probably you're visiting the lows of 18,005 or so again. Okay, that's the Hang Seng for you. Alright, any other in this? Oh yeah, Singapore blue chip. Okay, Singapore blue chip has reversed quite a bit, isn't it? Now, this is the weekly chart. Okay, so the weekly chart has been consolidating for the past 2 months or so, and there was a nice head and shoulders here. Okay, it seems that the shoulder has been broken. This was the neckline that it tried to break, this area here. Okay, but it didn't break. Okay, and it seems that the head and shoulders, the inverse head and shoulders setup has been invalidated. Okay, because one of the shoulder at about 310 level has been broken. Right, has been broken. And the whole thing is still a bit consolidating, but you can see a daily chart is actually a bit, okay, where's the level here? Okay, so the shoulder was around the 310 level, which was here. Okay, on the weekly chart. But you can see the daily chart, this low has been broken. So it's actually a new change of trend. Okay, and there's nice convergence on the MACD. So what might happen is this, we might make a slight push back, maybe back to the resistance somewhere here, and then we might make a nice push downwards again, back to the previous low. Whether it break the previous low, I'm not too sure. Okay, but it has made a new lower low here. What I'm looking out for is a lower high here, and then we can safely say that it has reversed. Because if it does this, right, if it does pull back to a lower high and make another lower low and is confirming a downtrend, okay, then I would say that the weekly chart, high chance we might go back to the bottom and test the 290, 280 level again. Okay, because for me the key support around the 310 seems to be broken. Alright, so that's Singapore blue chip for you. Alright, any other questions on indices before I move on to FX? Alright, there's no questions. Let me take a 10-second pause and I'll start FX.